Become a sustaining member of the Commonwealth Club for just $10 a month. Join today.
I'm Mark Zitter, chair of the Zedema Project, a member of the club's board of governors. I'm pleased to bring you this program, which is the first in a series of virtual sessions we'll be hosting here at the club. Today is March 18th, 2020. We are living in an historic time. The coronavirus and the disease it causes, COVID-19, are spreading rapidly and have changed life as we know it, and this seems to occur on a daily basis. And today, I should mention, is September 18th, 2020, 6 months after Bay Area health officials announced the nation's first shelter-in-place order. We had 7,500 COVID cases in America and 100 deaths. We now have 6.6 million cases and, of course, about 190,000 deaths. How much this world has changed in 6 months. The story is a split screen. On the one hand, we have exceeded 17 million cases of COVID-19 in America and lost more than 300,000 American lives. COVID-19 is now the leading cause of death in America. And last week, CDC Director Robert Redfield warned that for the next 60 to 90 days, we'll see more deaths from COVID-19 every day than we suffered during the September 11th attacks or during the bombing of Pearl Harbor. The news about a vaccine for the coronavirus is fantastic. We've created not one, but multiple safe and effective vaccines in an effort that many call the greatest scientific achievement in human history. So we have these two powerful vectors colliding right now, a burgeoning disease and a growing armament of vaccines to slow and combat the disease.
As the pandemic changed the lives of everyone in the Bay Area and across the United States, no one story was more significant than the COVID-19 pandemic. As a public forum to discuss the leading issues of the day with experts in the field, the club has presented more than 100 programs on different aspects of the crisis since mid-March 2020. As the Bay Area and the country expand its vaccination efforts, finally, we see the beginning of the end of the public health crisis that will change our communities forever. Exactly 1 year after life changed for us all, we look back and we look ahead at the COVID-19 pandemic.
Good morning, everybody. Welcome to this session of the Commonwealth Club. My name is Sean Randolph. I'm Senior Director at the Bay Area Council Economic Institute. And we are pleased to welcome you to this program on the future of the Bay Area's innovation economy as we come out of the global pandemic. This is a topic that I work on a lot, dealing with investors, startup companies, technology companies, and companies from around the world that are here. And it's really central to the future of our economy, which is widely recognized as the leading global innovation economy and center of technology, innovation, and startup activity and venture investment. It's much in our DNA, but like a lot of other things, it's changing with the pandemic. And our conversation this morning is going to focus on what has changed and what we can expect in the year or perhaps several years ahead. 1 year into the pandemic, we're looking forward to coming out of it. But we know that the world we come into is going to look different in some respects than what we considered normal before. We think this is only a year ago. It seems like an age. The economy was booming. Our highways were choked with cars. We were dealing with congestion. Home prices and rents were skyrocketing, the highest in the country. Some people thought maybe there was too much going on in the area. Office rents were peaking in Silicon Valley and San Francisco, and now we're seeing a ton of sublease space coming on the San Francisco market. Our roads, although they're coming back with cars, unfortunately, are once again filling up. But we know that companies and a lot of technology workers and others are leaving. So what's the road ahead? What is taking us down that road, and how can we influence the road we actually end up taking to continue to support this region's economy? It's the number one innovation economy in the world. And for that discussion, we've got probably two of the best qualified people in the region to share their views with us. Jennifer Stokovic is the executive director of SF City. It's an organization that's been around since 2012 that helps technology companies in San Francisco have a voice on policy and interact with government, especially around local issues that affect the tech sector in the city itself. Also, Ahmad Thomas is the CEO of the Silicon Valley Leadership Group that has played a very, very important leadership role in the Silicon Valley area for many years, representing more than 350 companies that work together to strengthen competitiveness and business growth in Silicon Valley. So we couldn't be more pleased to have Jennifer and Ahmad with us to discuss these issues. Just one housekeeping note. Before we get started, if you have a question for any of us, please use the YouTube chat feature. Those questions then will be sent on to me by our friends in the Commonwealth Club, and we'll get to as many of them as possible before the morning is up. So with that, let's go into the first question. And since we're at 1 year in the pandemic now, and there's light at the end of the tunnel, fortunately, could maybe each one of you share with us what your priorities were, what the world looked like to you in Silicon Valley and in San Francisco 1 year ago before the lockdown, and how your priorities have changed? What were you focused on 12 months ago? And what are the top things that you're focused on today, especially as we look forward to a reopening? So maybe we'll start with you, Jennifer.
Well, first off, to the Commonwealth Club, thank you for having me here today. It's a pleasure to speak with you, both Sean and Ahmed. This is a topic that we have been focusing on at SF City for pretty much a year now. It's pretty crazy to think that it's been an entire year since we've seen the shift. I can tell you a year ago today, when we were just starting to really understand what was happening with the pandemic, we were still squarely focused on some of our more traditional pre-pandemic issues. So everything from housing policy. How can we build more housing? That is a huge issue for all of our membership because they have so many employees that are coming into the area. We were also looking at some big regional transportation policy wins at the time. Transportation was actually becoming really close to top of mind for a lot of folks, especially tech companies in the area at the time. Of course, now we're looking at completely empty highways, and that seems so long ago. And of course, another big policy area was taxes, regulations. At the time, we were looking at how we could figure out a step forward for San Francisco's tax system. And since then, things have changed quite a bit. So first off, there was 3 new taxes that did pass in San Francisco in November. That was certainly not something that we had on the horizon a year ago. We also have been dealing with a lot of different efforts around how we're going to reopen the city safely. In particular, the city's been boarded up for the better part of a year. And especially in areas downtown, how we're going to reactivate that economy. We've heard upwards of 80% of some areas, the small businesses and restaurants have gone under. Obviously, of course, we have heard about some public safety issues that are going on downtown and in other areas. Unfortunately, another case that just came out this morning with an elderly Asian woman, of course, down on Market Street. So public safety has actually emerged as one of the really big issues that our members are looking at, and how we're going to turn the downtown back on and really get the city revived in a way that it looks like it did pre-pandemic. So those are the types of things that we're not I don't think that's what you would expect a lot of tech companies to be specifically focused on, but it has changed quite a bit, and the city's dynamics have changed quite a bit. And we now know that the way that people are going to go back to the office and the future of work is permanently changed. And we can talk a little bit more about what those permanent changes look like in a little bit. But when offices do turn back on, I think Ahmed would agree with me, they're going to look different than they did before. So that being said, Ahmed, I will hand it over.
Yeah, thank you so much, Jennifer and Sean. I'm grateful to be here today. I should say right at the top, Being married to a healthcare worker, I would give a huge shout out and thank you to all of our healthcare workers. Looking back over the last year, this has had such a detrimental impact on our communities. We've had so many heroes like our healthcare workers, our teachers, folks on the front line step up. And I want to make sure here 1 year in to acknowledge that here at the outset. And my experience would be similar to Jennifer's in many ways, but also very personally, I stepped into this job here as CEO 6 months ago. So between a pandemic, a reckoning on race in America, an economic downturn, obviously driven by the systematic shakeup we've had due to this pandemic, it's been quite a lot to manage stepping into a role like this. In the past, under Carl Guardino, who was our CEO for 23 years, we were extremely engaged around the innovation economy's biggest challenges, the biggest challenges in the region. All the items that Jennifer talked about, and I would say in particular, pre-pandemic transportation would probably be at or near the top of that list. Now, for me, coming in mid-August, pandemic, diversity issues, and everything undergird by business competitiveness in some way, shape, or form, which I know that we'll be talking about today. And business competitiveness takes all forms: housing, infrastructure, transportation, tax policy, the regulatory environment, frankly, the climate and how businesses are portrayed. All of that is under that umbrella. So I've been pretty busy these first 6 months in, but it has been quite a unique experience stepping into a role like this with so much happening in the world.
Thanks very much, Ahmad, and thanks, Jennifer. I think we see a lot of the same thing from the Bay Area Council. When I think back a year, the top priorities have been for a long time housing and transportation, and housing is perhaps more important than ever because it's one of the drivers of the cost here, which is pushing people away faster than ever. But transportation, we were figuring out how to build capacity to anticipate growth and demand, and now it's what's the viability and survivability of our transportation systems. So big change in the dialogue, although those issues obviously haven't gone away. So you both run membership organizations and you work directly with member businesses. How does the world, do you think, look from their standpoint? So they're doing their planning now. We're into 2021, obviously an important transition year. People are thinking about 2022. These kinds of issues we've begun to talk about, if you put yourself in the seat of maybe a typical CEO, if there's such a thing, how are they seeing the reopening process, and how are they seeing their role here as Bay Area companies and their future as Bay Area companies?
So I could start. I can talk a little bit about what we're seeing in San Francisco. So unequivocally, there's a lot of office downsizing that's going on right now. So this time a year ago, we were looking at about a 3% office vacancy rate, 3. And now we're looking at almost 20% office vacancy rate. So that has changed markedly in the last year. We have the equivalent of 10 plus Salesforce towers on the market right now, just to give you an idea of the amount of space. So certainly, what does the office look like when you reopen it, and how do you use office space differently? A lot of the companies that we're speaking to are going to be moving towards more of a either hybrid or remote first model. So we have spoken to a lot of different companies about what does this mean? And in general, many employees are saying, we want to have the ability to come to an office. So I'm not going to 100% go move to Colorado and live in the mountains forever, but we also want to do the majority of our work at home. So we're looking at, maybe employees are coming in 20 or 30% of the time on a weekly or monthly basis. So what that means for turning your offices back on is the set desks. The 9 to 5, Monday to Friday, really seems to be going to the wayside. Even before we got on this call, we were just talking about how Ford one of America's leading employers has now moved to a remote first model as of their announcement this morning. So it's clear that Monday to Friday, 9 to 5 model has really just gone away. And what does an office look like in 2021 and beyond is something we're trying to figure out. And we're speaking very closely with a lot of tech founders and CEOs. Certainly, it is going to look like a little bit less of an office footprint, potentially. A lot of companies are moving towards a decentralized or a hub and spoke model. So for folks that are not familiar, there's essentially 3 different ways that you can run your office structure. So you can have a headquarters, which is what traditionally many companies in San Francisco and the Valley have had. And, that's that mothership model, so to speak. Of course, Ahmed deals with a lot of companies that have those big headquarter presences down the peninsula. And then there are 2 other ways to run a company. So one of them being a hub and spoke model, where you really create hubs all around, the country or the world that are kind of full offices. So rather than being an extension or satellite office of the headquarters, they probably actually have an executive or leadership that sits within them. So rather than everybody being concentrated in one spot, they're spread out all over. And of course, the last model would be decentralized, where you've just completely decentralized your workforce. And the most interesting thing that we found was that in January, Initialized Capital did a study that found that 3/4 of all founders in their tech portfolio are moving towards a decentralized or hub and spoke model, meaning that they are not going to have a headquarters going forward. And that is going to be a very, very big change for offices and how they are used in San Francisco and in the Valley.
And what I would add, there are probably 2 pieces when I answer that question. One is just looking at the rote logistics of the moment. And for us, there's a lot of engagement around vaccine logistics, questions related to where we can have clarity, for example, for our essential workers in manufacturing or critical infrastructure. Certainly no one here at any of our large companies is talking about jumping the line. We're talking about trying to understand where regulations maybe 6 months ago had certain workers falling into place, phase 1B, for example, for the manufacturing workers. And where we are today, it's really unclear where some of those workers might fall in the vaccine chain, which is incredibly important to many of our companies with manufacturing operations here in our region to ensure those employees are safe every day. So a lot of work is spent, Santa Clara County primarily, San Mateo County as well, just around the vaccine communication issues and helping related to logistics and connecting dots wherever we can to add immediate value to our companies. I would say looking at, maybe longer term issues, certainty, Sean, to your question about planning and forecasting when our executives are doing budgets is incredibly important. So for us, we've been advocating at SVLG for a moratorium, some type of multi-year statement that we will not have any new business taxes. Now, it's not a deep commentary on tax structure, which I know we can talk about. It's more of a comment on the situation we face, looking at the cost-benefit dynamic here of doing business in California versus other states, coming out of a pandemic, which, as we all know, has just devastated so many segments of our society, particularly the communities of color here in our region, and seeing how our businesses can plan to thrive and grow here. I think having that type of certainty is important. Now, for many of our companies, Eric Yuan of Zoom, CEO of Zoom, is the vice chair of our board. Zoom has become ubiquitous, a part of our everyday. And it's one example of a company that's helped us be resilient and helped so many of our businesses find ways to not only stabilize operations, but be more productive. So to Jennifer's point, I do think when we look at the future of work and the future of how our companies thrive, it is that mix of being able to harness all the good that comes from our innovation ecosystem and the hub of technology that we have here, mixed with how we harness the technologies to be as efficient and productive as we can in a cost-effective manner.
Yeah, very interesting.
To add to Ahmed's point, I would say the tax structure is a huge thing that we've been dealing with. As I mentioned earlier, we were looking at one potential tax reform effort, and we ended up getting 3 on the ballot that all passed in San Francisco. So the volatility and the instability that we're facing when there's always new taxes that are emerging is a huge barrier that we face as a city, because the worst thing that you can do as a company is have that lack of predictability and that lack of stability in forecasting for your budgeting. It's not a matter of, are the taxes too high or the taxes too low? That's, of course, something we can talk about in our competitiveness as a region, but it's more so, how can you predict out 3 years of budgeting if there's a new tax every single year or more, 3 new taxes in this past year alone?
Yes, certainty matters.
Yeah, we'll definitely come back and drill in a little bit more on the tax-related issues, especially as we get closer to the end of the discussion. Talk about like what can we do together to kind of pass through this transition and come out stronger. So let's hold that thought, because it's an important one. One of the things, I'm thinking about the innovation economy in particular. For decades and decades, we've benefited here in the Bay Area as what most in the world agree is it's the premier global technology and innovation economy, really sort of an epicenter. And anywhere in the world you go, people will say Silicon Valley, Bay Area. That's it. That's the model. And the model benefited from concentration. Like there's just a lot of people and a lot of technology packed into what's really a pretty small geography. So the intensity of that interaction between people in different disciplines and people in organizations and between academia and companies and investors, all of that being crammed together has created this amazing dynamic. And now we're seeing that gravitational pull, which was actually able for many companies to overcome some of the negatives, the cost of living, crowded transportation, all of that, just the density of that really pulled companies in. So now as you're pointing out, we're seeing sort of centrifugal forces driven by remote work, sort of pulling people and companies outward. So as that dispersal takes place, it seems to be an open question, how far is that going to go? And the question I would put to you both, maybe starting with you, Ahmad, is, do you see this outward flow as maybe something short-term, something we're seeing as an immediate reaction to or outcome of the pandemic, or do you see it as something that this longer term we're going to have to deal with the causes? And to what extent are you seeing in Silicon Valley sort of a net outflow of technology workers or technology-related companies?
Well, it's certainly a very big issue right now. In my first 6 months on the job, 2 of our most iconic Silicon Valley companies relocated, moving their headquarters out of Silicon Valley. Certainly top of mind and a very significant issue for me in our membership. Now, there are a few ways that I look at this, and it's very important to note that we need to take steps now to ensure that data points don't become a pattern, right? So capital flows follow value, profitability, and talent, right? All of which we have in spades in Silicon Valley. So we see that even through this very dynamic and challenging period over the last year, our technology companies have been resilient. Our startup economy has been resilient. I think the last statistic I saw, over half of the IPOs that we saw last year came from companies in our region, about 16 billion in IPOs from Silicon Valley and the Bay Area. So there's no doubt that we have an innovation infrastructure that's robust, and I believe the best in the world. What I think is concerning, which is also an opportunity for us in the future, is that the cost-benefit dynamic is perhaps for the first time beginning to concretely shift away from us. So when I talked about all those great things, the talent, access to capital, the value added and created by our companies, that is being outweighed to an extent that is very concerning by the negatives. In particular, the affordability, the cost of living here and the cost of doing business here. And as we have lack of certainty as to where those costs are going or how far those costs will go up, it disadvantages us versus other states. I think Sam Liccardo, our mayor in San Jose, has written about this and I think has some very good thinking here, where we look at companies that are actually doubling down and investing here in our region, but moving their headquarters out of state to be places where there are policies that are more in line with being accretive to their bottom line and their value proposition. And to me, that's very, very telling. Now, we got great news today. Google announced $1 billion in investment in real estate, looking at infrastructure right here in California. We've got the Google project in downtown San Jose in Diridon, using them as another example, which is a $1 billion project that's taking us away from perhaps the model of the past around investment and around how we looked at a corporate headquarters in a community to a shared economic model, which to me is much more viable. For that project in particular, there are dollars that are allocated to community groups and ensure that communities of color and the underrepresented working families also get to participate in that success. And I think those are examples where we can have new build and new investment in ways that are nested in our community and adding value across all of those segments. But unless the cost-benefit dynamic is addressed, I do fear that those data points will continue to grow.
Great point. What about you, Jennifer? What are you saying?
So I think that there's something really interesting about what's happening with this tech migration, and we don't quite know where it's going to land, but there's really two different areas where we're seeing migration. And it's important to understand that the policies and what we need to advocate for really differ, because on one hand, there's the companies themselves. How do we remain a tax competitive region for companies to keep their headquarters? To Ahmed's point, there has been a number of shifts where, you've got some really loud folks that are leaving like Tesla, but some other quieter moves as well outside of either the San Francisco Bay Area or outside of California for tax reasons. You also have the other end of the exodus, so to speak, which is the tech workers or the workers in general that are in these high skilled jobs. And so when we think about how do we balance the two needs, obviously we know that we need to have the kinds of building and taxes and everything needed to promote this as an economy where you can grow your business for CEOs and executives and the board of directors. But we also need to think about these employees, because they are now given this opportunity where they can still work for these amazing employers anywhere in the country. So how do we make sure that they have somewhere to grow themselves? And that's a little bit of a deeper conversation, because that's when we really get to Ahmed's point, some of the goals around making more diverse, equitable communities, making communities where people can actually afford to live. More than 70% of tech employees can't afford to buy in San Francisco. And you can juxtapose that across all San Francisco households, where 82% cannot afford to buy in San Francisco. So tech workers are really they're in a different category, I think, than a lot of people tend to think about. They are increasingly looking for places where they can settle down. They're increasingly looking for places to have families. They're not 22-year-olds playing ping pong anymore. Like, we have matured past that stage. And so I think the region really needs to think about, how do we make this a place that you want to grow your business, but also how do you make this a place where you can actually call home? And that's the $1 million question for this migration we're looking at. We have like 90,000 or so USPS address changes outside of San Francisco that have happened in the last year. So for folks that aren't, too familiar, that's about 10% of the San Francisco population. So about 10% of San Francisco has changed their address and moved outside of the city. Will they come back? That is still to be seen. To what percent will they come back? To give you an example, in 2001, when we had the .com crash, we lost almost 30,000 people in one summer alone. So we have seen these kinds of exoduses before, and we were able to come back from them, but we did not have the option to work remote permanently then. And that's the new thing that we're dealing with. We've never dealt with this as an industry where there truly is that third option. It's not just boom, bust binary. It's pivot to remote first. And how do we remain competitive as a region in that new ecosystem?
Yeah, and I would add, there are limits to public budgets and where public policies can solve the problems, the challenges that Jennifer and I are speaking about today, in my view. So one thing that you'll often hear from me is how we can be more, well, one, entrepreneurial in our public policies, but two, how we can utilize private capital, market-based solutions to be part of a future that is setting forth new dynamics and new templates for how we do infrastructure. You know, if we look at affordable housing, transportation has its own set of challenges because those projects are usually so big that you do require some type of public subsidy. But affordable housing can be fully financed, you know, tax exempt, for example, meeting certain criteria with private dollars or with private capital. There's an entire movement going on around social impact investing, where you have large impact focused institutional investors where there's more capital than projects to be funded. I know it. I was an investment banker before doing this, focused on deals like that. And I think we need to take in and harness this innovative spirit that's made California and Silicon Valley what it is. We need to bring that to our public policy. And I think there's a lot of opportunity there.
Thanks so much. I 100% agree. Absolutely. There's so much that we can be doing to better utilize the resources, particularly with the tech economy. We in the city of San Francisco have some departments still running on MS-DOS in the capital of innovation in the world, just to give you an example of how much bureaucracy and red tape we really have that is holding us back. I think there's some tremendous opportunities here.
There's a question, Jennifer, also, which for both of you related to something that you just mentioned about how important the cost of housing is as tech workers and others think about where they're going to live in the future. And one of the things that concerns me about the companies that are leaving, and of course, obviously not everybody's leaving, but you have certain, name brand companies, Oracle, HP Enterprise going. And some people might say, well, they've been around a long time. But really, so many of the impressive companies in our region, both the city and Silicon Valley, that are global name brands today were startups 5 or 10 years ago. And the startup system here really has been a wellspring of companies that have grown to be enormous and dynamic and global companies. So I think we rely to an important degree, more than any place else in the world probably, on this startup system generating important companies that employ people and deliver value. And when startups leave, it's pretty rare that they make the headlines. But recently, I've been talking to the founder of a $1 billion company, way above $1 billion now, that came from another country. Started her company here maybe 10 years ago, and she advises people from her country, startups coming here, about how to get going. And she told me last week, well, when I talk to them, I advise them to think twice about coming to the Bay Area in California. And she said, in fact, if when I started my company, I knew what I know now, maybe I wouldn't have done it here, even though I'm grateful to the state for everything that it's done. I spoke to another company. This was a senior tech guy, but his family are all entrepreneurs. They've all founded, and 3 of them have run companies in the Bay Area. And in the last year, one had left for Israel, one had left for Miami, the other had left for New York. And so it's hard to wrap your head around what are the numbers, because it's impossible to trace. But on a big scale, anecdotally, I hear about these younger companies kind of drifting out to other places. And a lot of that, of course, has to do with the cost of living that you mentioned, Jennifer, and the cost of housing and wanting more space and wanting to live somewhere. You got a family now, you can maybe afford a house and afford more space. So I'm concerned not just with the big name companies, but also the smaller ones. We think about companies like Pinterest that grew up here, a startup not long ago. When a company like that says we're going, I think we really have to take notice. So there's really 2 questions here. I'd welcome any thoughts you have about what you may be seeing about younger, smaller startup companies. But that raises the question about who's the competition. So I know, Jennifer, you've been doing programs on what's going on with Miami or with New York or with Austin. Nashville is being talked about now. We know there's some leakage into the Southwest. So when we think about that, so who's the competition? And how would you rank them in terms of their potential to draw companies and tech workers from here? And just how serious do you think that competition is or might become, especially if we didn't address the issues you've started to raise?
So there was a recent study that I referenced earlier, the Initialized Capital study, that specifically asked, where is the best place to start your tech company? And the answer was not San Francisco. The answer was not Austin. The answer was not Miami. More than 40% of founders said the best place to start your tech company today in 2021 is in the cloud. So I think it's really important that we understand that we are facing not a company's move to another city necessarily as the dynamic, but companies just may never have a presence in a city altogether, and they may have this decentralized remote workforce. And so I think that first and foremost is something we need to think about, is how do we adapt if companies want to be remote first? How do we be the kind of city that can adapt to have these types of remote work hubs, right? Or these hub and spoke models. But in terms of like actual cities that are potentially, vying for our spot, we hear a lot about Austin. We hear a lot about Miami. The fact of the matter is they're quite far behind in terms of like creating like a true tech ecosystem. We just did a talk on this earlier this week, as you mentioned, Sean, where we talked about how you need to have at least three $10 billion tech companies to create like a true tech ecosystem. And there's actually only one city in America currently that has that other than San Francisco, and that would be New York City. So I do think that New York is going to see a lot of growth. New York is starting to grow their own homegrown companies too. Historically, 10 plus years ago, or even 5 plus years ago, New York was seen as like your satellite office. And, the West Coast is where everybody is, probably somewhere where either Ahmed or SF City folks are, their folks are lying. But we now are seeing a lot of companies get started in these new cities. So I think New York is going to really benefit from some of these changes. You're going to see Austin probably make some great gains because they've been working on this for the last 5 or 10 years or so, really trying to bring larger presence in. Facebook is doing a lot of expansion in Austin in particular. Miami, of course, they're very vocal about it, but they've still got a long way to go. In general, I don't think it's an us versus them, because I think that the founders that were already looking for a new opportunity out of the Bay Area, they're just going to go to these new areas, or they're going to go to remote. The Bay Area is still going to remain the innovation capital for many of the mainstream tech companies that are already here. It's still going to be the best place to get talent, but we're also just going to see new ecosystems that are growing as well.
Yeah, this notion of an inflection point, I think, is so important to understand, and also to really to capture as an opportunity for our elected leaders, for business leaders here in California, where we have a leadership position that I think is pretty unparalleled. I'm obviously biased, but I think very highly of our innovation cluster and technology innovation economy in Silicon Valley. However, there's a real recognition, if changes are not made coming out of this pandemic, we could really weaken our competitive position. That's why I think inflection point is so important, because it's never been such a stark reality, in my view, than it is now. And this reflects the feedback I hear from our business leaders and executives. Now, this is not a zero-sum game, in my view, which I think reflects what Jennifer said. There's enough water in the innovation well for everyone to have a drink. I think we should have the biggest cup. But in my view, it is fine for companies to do their thing in Texas or Florida or wherever else they're going to do it. We just need to ensure that we're doing all we can for our companies in California to thrive and grow. I would look at our tax code and have specific either tax credits or tax holidays around startup investment, targeted investment in small businesses, or even looking at our startups and how we might be able to claw back taxes when they're profitable. We've had a lot of conversations around that with executives within our group. And, I think some of these ideas are reflected in what I've been doing, our board, what our executives have been reflecting here at SVLG in the last 6 months. A big focus on the innovation economy with startups, an entire ecosystem we're trying to create within SVLG that has a focus on underrepresented founders, but also having policy feedback and policy shaping from that segment of our economy. When we talk about diversity and diverse leadership, with Sean, Jim Wonderman at Bay Area Council partnering with us on 25 by 25, I think that's accretive to the bottom line. Having more diverse leaders makes our companies more competitive. And I firmly believe that those are money and business issues. And then ultimately, when we talk about taxes, taking a baby step first and saying, let's just agree that we're going to take a period here and not increase taxes. Because it's not to, again, a point that Jennifer made, I think, very well. It's not debating about our taxes or equity structure. It's a straightforward and clear statement that coming out of this pandemic, facing an inflection point, trying to be more entrepreneurial on how we might restructure our policies, this isn't the time to shift that cost-benefit dynamic further away from us.
Thanks. That's really helpful, Ahmad, because it does transition us back to where almost we started the conversation around what do we need to do going forward to deal with the issues that are presently negative. Some were negative before, but maybe they're more negative now coming out of the pandemic. And the types of topics that come up again and again are housing availability, homelessness, which is more and more a factor, I think, for people coming to and living here in the Bay Area. I think the intractability of it or the lack of progress on that, I think it's playing a role in the image of our competitiveness and our ability to deal with issues here in the region and in the state. Then, as we were saying, taxation, regulation, not to say that regulation is bad per se, but sort of cumulatively, it tends to make a package, whereas I've talked to companies, and these are sometimes, younger companies too, they haven't been around a long time. There seems to be a feeling that business really doesn't have much of a voice locally and in the state, that not to say that local government or state government is anti-business, but maybe it's kind of indifferent to business, sort of takes companies and business for granted, whereas we know that a lot of other states don't, and they do everything they can to attract, but also to support business growth where they are. So if we look ahead, and again, we're coming out of the pandemic, God willing, and hopefully by summer and then beyond that, we have a new footing and we're going forward. If you were to list, you can choose your number, 2, 3, 4, 5 top things that you think we need to do as a community here, and hopefully do it together with partners in the community and partners in local government. What do you think those top things would be? Maybe I'll go to you first, Jen.
Sure. So in terms of the top things that we need to recover, I think Ahmed's point, of course, that we need to have some sort of moratorium on taxes is extremely important. We need to be able to tell our companies, you are recovering from what may be the worst business collapse that they have ever experienced, right? Some of our companies laid off as much as 25% of their workforce. They need to know that they have a place where they can rebuild. And part of that means they need to know that they can rely upon the Bay Area's tax structure and regulations to reflect that. So I think number one, that would be a huge policy goal for us. Number two, we need to commit to building more housing at every single level. In the last 5 years, we created 8 jobs for every 1 housing unit in the area. So we are just shockingly out of whack. So we need real city leadership to agree. I think that this could range from everything from, there's things that Senator Wiener is working on where we can build up housing around high transit areas. Those are all the types of things where we need real change, and we need it to happen now. And then, of course, the last thing is we need real solutions around those that are experiencing homelessness, and we need real solutions on how we are going to make our city safe again. So this in particular is a San Francisco issue, I think. Ahmed obviously covers a much larger peninsula with different environments, but being in a very specific urban environment, we need to figure out how we can get our streets to be safe. We need to make sure that folks are receiving shelter. We do not provide shelter at the rate of any other major city. New York City provides shelter to more than 90% of folks every single night. And we are not coming even close to that. I don't even think we're at 10% in San Francisco. So we need real solutions so that folks do not have to be living on the street, so that our streets can be safe and clean again for everybody, so that we can turn these offices back on. So those would be my top three. Of course, there's many more. I do think the regulations and how we can bring tech into the solutions, especially through some of the government public-private partnerships that are available, is a huge one as well. Bridging the digital divide, 5G infrastructure, all those types of goals as well.
Yeah, I mean, and Sean, for us, it's really one, which is business competitiveness, but it touches on everything that Jennifer's shared there, with a lens, I think, in particular around housing, affordability, and taxes. All of this done with a lens toward equity and how we can be most helpful, I think, in kind of directing investments to communities of color in those areas of our cities that have been most neglected. And cities do matter. In fact, next month, we're having an entire event around it called Cities Matter, around housing and transportation investment. But the MO, or maybe I'd say my MO, is to be disruptive. As I said, I'm new in this role, and I would really encourage business leaders to engage around the issues that we're talking about here. We need more hybrids like myself engaged around these issues. And when I say hybrid, I'm someone who has a background as a business executive, but also has worked around public policy and understands these issues. And our voice, I would say, is not as strong as it should be. And so with more engagement, and I think with more innovative thinking, not being afraid to be disruptive, we can put ourselves on a much better glide path. Because if we don't, I think we're seeing the data points of these companies leaving. It should be very concerning for many of our executives and community leaders, because I don't think it will stop without change, and without changes that are enacted very soon.
We have a question here from our audience. It's actually two questions. One is there a role that the state can play in addressing these issues? So when you engage with local partners here, but you obviously engage, especially I know in Sacramento, what should that dialogue be around? And the other question is, there's a lot of funding, of course, now through the American Rescue Plan, just passed by Congress. Some going to come to the Bay Area. Have either of you had any sort of engagement around the dispersal of that funding and how any of that funding might help advance any of the objectives we've been talking about this morning and support the region?
Well, I can say on the second question, we had one of our members of Congress in front of our leaders last week and got a pretty good briefing around where those dollars are going, which it's much needed. And I'm very encouraged that we're able to get that type of investment in funding coming soon. In particular, if we look at Farebox related to transportation, if we look at the direct payments to our individuals in our community with lower income who have really been hit so disproportionately, I think all of that is very, very encouraging. At the state level, there is a tremendous amount of potential. And I think that's where you go back to the point of companies doubling down and reinvesting in the region who may be taking operations for tax purposes outside of the state. And that just goes to tell you that when we cite the IPO statistics, when we talk about the talent generated, when we look at our great research universities of Stanford and Santa Clara and Cal, San Francisco State, et cetera, there's an ecosystem here that I continue to believe is unparalleled. But where the state can be helpful is in helping us build an innovation infrastructure that provides more incentive around direct investment for our startups, around direct investment for research and development, around direct investment, frankly, for expansion here in California. And that is a side that's on the business tax ledger, and also a side on the employee and employer tax ledger, because as Jennifer noted, this cost structure is untenable, not only from the employer standpoint, but for the employees who have to afford to live here.
Add to your first point, Sean, your first question, I think that a lot of the housing solutions that we are seeking are going to have to be spearheaded in Sacramento. So that is a huge place where the state can play a role. And to echo Ahmed's sentiments around how we are investing in new startups, pretty much every single state in this country right now is putting together some sort of incentive plan. Other cities are putting together incentive plans where they are attracting not just startups with investment, remote workers with investments. There are a number of cities right now that will literally pay remote workers to come live there. So we are very, very far behind when it comes to those types of incentives to help startup growth, to help employees find a place to live and to thrive. So I think that the state has a huge opportunity there. And we have such an amazing research universities that we have. It's unparalleled. So there's no reason why we can't incentivize those folks to stay in our state to grow their companies.
That actually gets us to what might be a wrap-up question. I would sort of flag that we have a few minutes left. If anybody has a final question to submit, this would be a good time to do it. But we've been talking about companies leaving, but I think what you said, Jennifer, just sort of turns the corner a little bit, because without being complacent in any way, we have this amazing innovation economy. And I think anybody in the world would still recognize that this is the place to be, the first among many, probably. I know that we've sort of taken a hit talking to people in other countries. They're watching what's going on. They're very aware that some companies are leaving. They're very aware that some startups are leaving. And they're asking the same question we are today. Well, what's the future of Silicon Valley? Will it still be the place we want to go to, the place we need to go to? So I think that's very much in play. I mean, how we manage this will really affect how and whether we continue to attract all that talent that you mentioned earlier that's so critical to our growth. But our assets are just remarkable. It is, as you were saying, it's Stanford, it's Cal, it's UCSF, one of the top biomedical campuses in the world. It's UC Davis, maybe the top ag tech university in the United States. We still have the largest pool, and will continue to have the largest pool of venture capital in the United States, especially growth capital. And so when you look at growing companies, where do you come? Well, this is where that money is at. And we have this really diverse workforce of people from everywhere in the world that really drives the innovation. The level of talent available here is really unparalleled. So and we have an attitude, sort of a problem-solving, can-do, aggressive attitude that I think really pops the Bay Area out ahead of almost any other place in the country or the world. So when I step back and look at it, and investors who I ask the same question to say the same thing, it seems that we have a remarkable stock of assets, where if we manage them right and we do the right thing, suggests that we should be able to remain the world's leading innovation economy for a very long time to come, even if activity becomes more dispersed. And maybe it's not a bad thing it's dispersed. Having more startups elsewhere in the United States, bringing economic development to other cities in the country, hey, that's great. But I think, as you were saying, as long as we remain the center of so much of that activity that comes and goes through the Bay Area, yet that's maybe the critical thing, because we've never owned it all. We'll never will own all of it, and that's fine. But how would each of you see the future of the innovation economy here? Are you reasonably confident? We've talked about the things that will affect it, how strong it comes back or not. But what are your own feelings about the kind of innovation economy we might have here 2 or 3 or 5 years from now, depending on how we play our cards?
I would just say, the last time we saw an incredible tech boom was coming out of 2008. The recessions tend to create some of the world's best innovations. We're now seeing the fruits of that labor now in the last few years of IPOs. Most of those were 2008 companies. So we do have a huge opportunity in this new economy that we're building to bring new startups in. And I'm sure we're going to be seeing a lot more unicorns coming in the next few years. We need to make sure that we have open arms and that they know that San Francisco and the Bay Area is a place for them to grow, because the stats show that when tech grows, the entire city benefits. every single one of those tech jobs brings like $650,000 towards the city economy. Every single one. Every single tech worker that you bring into San Francisco creates something like 4.5 different service sector jobs that are related to it. And so the most important thing to me is we need to show that tech is part of the recovery effort and that tech is going to be a partner in how we grow the city back into the new future. And so I think if we are able to really stand up and city leaders are willing to very externally and vocally voice that in a way that other city leaders in other states have, that we can get back to pre-pandemic numbers in no time in the next 3 to 5 years. But that is only if we make tech part of the solution, not just, a source of tax revenue for us.
I'll be fast with 3 quick bullets. I know we're low on time. The first is I'm extremely bullish on Silicon Valley and the Bay Area. I wouldn't have taken this job 6 months ago and left what I was doing if I didn't believe that fervently. Second, we've got to do a better job of highlighting our successes. I've sat here and I've talked about all that needs to change, which I think is required to maintain our competitive position. But you hear and you heard very little from me about all the great things that we're doing. And I think that's indicative of where so many leaders here in the state are. And we should do more to highlight the great things that are happening here in California that show why you should be bullish about what we have going on. And lastly, I would say for our business leaders in particular, using myself as an example, let's engage. If you want to be disruptive, if you see California as an innovation lab, if you want public policies that are more entrepreneurial, get involved with these organizations and what we're doing, because your voice matters. And I think it probably matters now a lot more than it did pre-pandemic, given all that we're dealing with. So thank you, Sean. Those would be my thoughts. And again, I appreciate the opportunity today.
We have one more question. I think we've got a couple more minutes. We have 65 minutes, like a little bonus at the end there.
All right.
Question from the audience, and I think you kind of led us into that, Ahmad. So are leaders in government listening? So Mayor Breed, Mayor Liccardo, Governor Newsom, members of the legislature, city council supervisors, but especially, let's say, the mayors and the governor. Do you think they're getting the message?
Well, if I talk about Silicon Valley, yes. I mean, Mayor Liccardo sees these issues through a prism of this shared economic value model, of understanding that helping businesses is helping everyone in our community. Helping businesses is helping solve some of our equity issues. Having city budgets and a general fund that is healthier allows more investment in diverse and underserved communities. So speaking to the local leaders who I deal with most frequently, I can say unequivocally that he's someone who understands the issues that we're facing. And again, I would be very clear in tying the situation that we see here going forward and investment to the equity issues that we face. They are one and the same in terms of the solution and the opportunity set we have to make progress going forward, in my view, at least.
I would say as well, to Ahmed's point, that the mayors and the governor in this state absolutely are listening. Mayor Breed, of course, has always been a very pragmatic mayor, and she understands the role that business plays. And she understands that the opportunity that business plays as well. A big thing that we have been working on with her for several years now is how we can get those tech jobs and opportunities to the youth of San Francisco, because it's such a huge part of how we can build a more inclusive workforce. With that being said, I don't know that necessarily every city leader in San Francisco is listening to that same message. And that's where the divide really starts to happen. And, I think that's all I will say on that. But our mayor, of course, is a strong ally, and we look forward to continuing to work with her.
Well, I'm learning from Jennifer, being new here, how to be circumscript in what you share, and also being new, I'm building these relationships as well. I can say we're fortunate to have a mayor in San Jose who is so tied to and so supportive of the innovation economy. But I don't think it's speaking out of turn to say that we could do more in California and more in our region to be more supportive of businesses, but with that aim of driving more equity and having more shared economic value across the board. Maybe that's the way I'd put it, Sean.
Great.
Absolutely.
I think we've got agreement on that. So I guess the clock is winding down. Any last comments or statements before we close it out? If there aren't, I think we covered a lot of ground, and thanks so much. So I'd like to thank the Commonwealth Club for hosting this today. The program is going to be published soon on the Commonwealth Club's website, so www.commonwealthclub.org. So you'll be able to find it there very soon. In the meantime, it's been a great conversation. Thanks so much, Ahmad. Thanks so much, Jennifer. Lots to talk about, really critical for the future of our economy and our region. A lot of great insights to share. I think it would be interesting if 1 year from now, in March 2022, when hopefully we will be fully out of the pandemic and on some kind of a new footing, yet to be determined, we can have this conversation again and see what happened and see what progress we've made. And hopefully we will have made progress on these issues by then and will still be the world's leading innovation economy. So with that, thank you very, very much, everybody, for joining us today. And again, thank you, Ahmad, and thank you, Jennifer.
Thank you.
Thank you.